Meta surprising Wall Street by issuing its first ever dividend. Could this be a sign of megacaps maturing? And which others might be next? That's the focus of today's Tech Check with Deirdre Bosa. Hi, Dee.
Hey, Courtney. Well, let's talk first about why Meta's dividend was such a surprise to the street, because it really represents potentially this broader shift within tech in Silicon Valley. It used to be that tech companies, they're growthy, they're innovative, they were going to reinvest every dollar of profit back into the business. That mentality met the mentality of the year of efficiency led by Zuckerberg himself. And here you go. We're at Facebook, Meta, issuing a dividend, which made us kind of think, who could be next? So we looked at the capital allocation plans of the Super Six. We left Tesla aside for now. You can see that Apple and Microsoft, they've had robust capital return plans for a long time, for decades. The kind of glaring omissions here, remaining especially after Meta, that's Google and Amazon. Amazon, of course, is almost 30 years old, but it didn't really become profitable until 2015. This quarter, everything kind of came together. Huge operating income, better margins in its e-commerce business, a growing cash pile. So it probably could issue a dividend. The question is, will it? Amazon is still known very much to reinvest back in the business like it did during the pandemic, doubling its logistics footprint. Google, that is an interesting one because Alphabet has done a share buyback, but it's resisted calls for a dividend, and that may be harder to do going forward. Alphabet is kind of your classical Silicon Valley, right? It has its other bets unit, which looks at big moonshotty projects, but this year has certainly been indication that Google is getting more fit, more efficient. So does that mean potentially that dividends could be next? It's possible, guys. Anything is possible now that Meta did it.
Let me turn to Sarat, if I might, Dee, for just a moment. How much more appealing would Alphabet or Amazon be to you if they paid a dividend?
So I think this signal, and one of the reasons I think Meta's up where it is because what do they signal? Capital discipline. Mm-hmm. If you're going to return, at least in the United States, if you initiate a dividend, you don't cut it back. It's not a flexible dividend.
It's not. We'll do it this quarter, but not next quarter.
Right. So what does that tell investors? It tells us that they're going to actually have a minimum hurdle of this, and we're going to look for it to grow. So that tells you this company's now looking at, maybe the moonshots aren't really out there. It's also telling you that they're not going to spend money just on acquisitions that maybe don't make any sense. Plus, we know that's really not working these days with the government. So I think if Google did one of those, I think it'd be really good. One of the reasons Google stock didn't do as well, it's not because they didn't have really good expectations. They also said we're increasing our CapEx. And we're now in the year of, I call it the year of cash flow. Because if you say our cash flow is going to be less than it's supposed to be or we think it is, you're going to actually get punished. I mean, look at Charter Communications today. Look at some of the stocks that have said. I mean, Microsoft also said that and didn't do as well. But when you're saying we're returning capital to shareholders, we're going to start a dividend, you're signaling to your investors that we're really focused on shareholder value. Mm-hmm. And I think that signal, if it came from Google, it would tell people, oh, wait a second, you're not doing all this
other stuff. They're not going to do all this
the Waymo,
pie-in-the-sky stuff.
Stuff that back in the day,
it may not pay off.
Exactly. 2 or 3 years ago when interest rates were zero and we're just trying to grow revenue and try and find. But you have now good growing businesses that are high cash flow. It's not saying they're maturing, but you're focused on enhancing the growth.
But maybe the management's maturing.
That's very true. So
Deirdre, you want to jump in?
Yeah, the other thing I would add is, yes, it shows discipline, but the reason why tech companies haven't returned a dividend is because there's this thinking that they know best. They know how to keep innovating. But in the case of these mega caps, they've shown over the last few years that they can return capital to investors and they can keep innovating. They can walk and chew gum at the same time because think about it. Sarat even said it with the CapEx numbers. They continue to invest in the business. They continue to stay ahead in generative AI and spatial computing while returning investors. So you don't have one at the expense of others. And that's also an indication of just how incredibly profitable these companies have become. Yes, their weighting in the broader markets has increased, but they've also been able to execute on that.
All right, Deirdre, thank you very much. Deirdre Bosa, Sarat Sethi.